All right. Good morning, everyone, once again. It's my pleasure to welcome you all to the FMDQ Next Global Money Week Financial Literacy event. You're most welcome. And we're very excited for this opportunity to gather and for you all to learn about the financial market. My name is Kofo Odunto. I'm your host for today. I look after the corporate responsibility group here at FMDQ, which houses our flagship corporate responsibility program, FMDQ Next. As you all know, the theme of this program is building financial resilience and starting your career right. It's going to be a fun session today, very interesting. You'll be learning about the workings of the financial market, the various securities traded and different investment vehicles available for you to actually invest in. You would also learn practical tips on how to grow and invest money. You also learn about skills and the attitude for wealth creation, as well as, there's a career segment where you get career advice on how to advance your career and set yourself apart. We have fun games and activities, quizzes, and lots of prizes to be won. So please endeavor to participate. Today's session will be a 2.5 hour session. It's going to go very quickly because we have a packed agenda for you. And I'll just quickly run through what we would be taking, how today's event is going to run. So the first segment will be on, introduction to the financial market. There'll be Q&A. So, take that opportunity to raise your hands and ask any questions, or even during the session, you can actually submit using the chat box and put questions in, and we'll address the questions during the Q&A session. After the first Q&A, we'll then have the second segment, going deeper into the different investment vehicles that are available for you to invest in. Another Q&A session, so please take advantage of that. Send your questions in the chat box, any questions you'd like on the financial market, and we would endeavor to answer your questions. There will then be a break session, there'll be activities, financial market games, and there'll be a quiz to test everything you've learned during the teaching sessions. Then we'll then move to investment 101, investing, talking about practical steps to investing. Again, there'll be a Q&A session and then the career zone, and it'll be done. That's it for today. So I'd like to quickly introduce some of my colleagues who would be taking this session with me. If you'd like to turn on your cameras and just do a quick wave. So here are a few of my colleagues that will be supporting today to ensure that you're equipped. Thank you, guys. And then a few rules for today. Let me just go through the rules. Like I said, if you have any questions, just throw them in the chat box and we'll take your questions during the Q&A session. You all need to ensure you're muted so there are no disruptions during the presentation, please. During the session for the quiz, the link will be dropped in the chat box, and you need to ensure that you do not close Zoom. So when you click on the link to access the quiz. But guys, please participate during our break session so that you can, for the opportunities to win the different prizes, and also just to test your knowledge on everything we've learned. It's just a fun way of testing your knowledge. So please endeavor to participate. So without further ado, I'll quickly run into, I'll just share my screen quickly and just give you an overview of FMDQ Next, this flagship corporate responsibility program that is that's hosting today's event. Please let me know when you can see my screen, please. Okay. I know some of you may have heard about FMDQ Next, and some of you may not have. So this is FMDQ Group's learning and development initiative that provides financial market education and literacy to Nigerian youth. We're basically trying to get the Nigerian youth to be financially empowered. Our target is primary, secondary, university, and fresh graduates. And we offer different initiatives, teacher class, trading simulation exercises. For some of you who may have been on one of our programs, that's usually fun, but obviously because of COVID, we cannot meet at this point to trade, but we're working on getting trading virtual, so hopefully soon. We also have excursions and tours, and we have a summer camp. And the essence of this program is to make sure that from a young age, you know about the financial market, you're exposed to different investment vehicles that are available to you, and for you to start expanding your income streams even before you graduate. You save money, you have some money invested, so it grows, so it's not lying dormant. So this program essentially is to equip you guys to be financially aware and to start investing and making your money work for you. So I'll quickly introduce my colleague, Bolaji, who would be taking you on FMDQ Group, just to introduce to FMDQ who we are, and before we go into the main session. So Bolaji, please would you come on and join us?
Okay. Hi, everybody. Good morning. If you could please just let me know if you could hear me, because I had a fun experience yesterday.
Yes, we can hear you.
Okay, thank you. Hi, good morning. My name is Mobolaji Caxton Martins, and I work with the marketing group within FMDQ's Marketing and Communications division. My job here really is to introduce you to FMDQ Group, how we are structured as a business, and what motivates us to do what we do. So I would start by saying FMDQ is Africa's first vertically integrated financial market infrastructure group. And I mean, if those words seem like they're out of this planet for you, don't worry. You've come to the right place. That's why you've registered for this session. During the course of the session, you'd understand what a financial market infrastructure group is and how it's related to FMDQ's business. At FMDQ, we are broken down into a number of subsidiaries. So we have FMDQ Securities Exchange Limited, we have FMDQ Clear Limited, we have FMDQ Depository Limited, we have FMDQ Private Markets Limited, and we have IQX Consult Limited. FMDQ really is positioned, we're strategically positioned to provide trading, clearing, risk management, depository, and obviously data and information, which is, my personal favorite. I think of it as the future of the financial market world. So at FMDQ, those are the services that we offer to the market, and that's how we create value for our stakeholders. If you're just wondering, who's behind FMDQ, if you look at the slides, you could see, the Financial Market Dealers Association, the Central Bank, the Nigerian Stock Exchange, and the commercial banks, which are the ones that you're most likely more familiar with. Also at FMDQ, pretty much what motivates us, we're looking to be the African builder of financial market ecosystems, and we do this by collaborating with the markets through our mission. What we do at FMDQ is built on strong core values. So just by thinking of how all these businesses work together, you can understand that teamwork and collaboration is obviously a very key one for us, because if we don't have that, there's no way these businesses can work together to create value. We're value adding, we have integrity and innovation. So at FMDQ, we're constantly looking for how we can bring about new products, bring about new processes, just bring about things that would power the Nigerian economy through innovation. In terms of how we achieve this, we do this through our gold agenda, which is pretty much what we are grounded in. So we think about global competitiveness, operational excellence. We're always looking to make the market more liquid than they currently are, and more diverse as well. So in a nutshell, that's FMDQ Group for you. That's pretty much it. Unfortunately, you don't get to ask me questions during the session. You'd probably get through other sessions to understand better how FMDQ does what it does and how we create value for our stakeholders. Thank you very much for listening, and I'll take it back to my colleague, Kofo.
Thank you very much, Bolaji. And guys, if you do have questions on FMDQ group, you please use the chat box to ask questions, and we'll try to answer them in the course of the day. Yeah, thank you so much, Balaji. I'll quickly move to the next segment, introduction to the financial market, and I'd like to introduce my colleague, Segun Akintoye, who will be taking that session. Segun.
Hello, good morning, guys. I'm excited to be here. And it's also a fun moment because this is one of those sessions where it's an eye-opener, because you then realize quickly that there's this much amount of knowledge that you should have had, for some of you, probably not everyone, that you've not accessed in the past, but now and again, this is going to be just the beginning, so don't be surprised. Some of you perhaps have been part of the previous sessions we've had, enlightenment sessions we've had in the past, but if you're not one of them before, not to worry, we'll cover all of the basics in this session, and hopefully when the COVID-19 pandemic is over, you will be able to participate in our offices in the actual live trading sessions. Okay, let's get started. Let's talk about the financial system. But before we touch on that, why is it even necessary for you to understand what this entails? Why should you care? By design, by design or by circumstance, the moment you're part of this world, you're part of the financial system automatically. So you do realize how it is that you can communicate in English or in your local dialect, and you do not necessarily object to that because it's a means of communication, and it's really, really important. Likewise, that's how money in your pocket is important. You can't possibly acquire any fiscal assets without necessarily having money in your pocket. And if you deal in money, then it naturally follows that you should understand the entire environment, the entire structure that supports how money flows from one party to the other. So it is super important. If every day you leave the house or you transact in business, or okay, you went to school, graduated, you do realize that you had spent a significant amount of money to acquire the knowledge that you have right now. And how did that money come about? How does money flow from one party to the other? That entire ecosystem is what the financial system is all about. And it's super important that you have an appreciation of it, because you do not have a choice, so to speak, in quotes, as to how you operate in this market space. So delving into it quickly, what is a financial system? It's an ecosystem that involves financial entities, financial markets, financial markets, and financial intermediaries and instruments. So putting it in layman terms, what does that mean? It means is that collection of markets, trading venues, exchange venues, locations where you transact business. And in that market space, it also includes the intermediaries, the parties that trade there, and the products on which they trade on, or the products in which value is exchanged upon. So let me put it in perspective for you. Many of you have been to the Lagos city market, the Eco market, as it's popularly known as. Perhaps you've gone with one of your parents, or you've gone on your own to buy a piece of clothing. The tendency that entire market is similar to what you have in the financial market. That is where people that have cash and are interested in certain commodities go to buy those commodities. Similarly, in the financial market, you go to the market when you have surplus funds, or you have some monies to put aside. You go into the financial market and buy instruments. So in the case of the eco market, the equivalent of the financial instruments in the financial market will be the piece of clothing that you want to buy. So that means that you go into the market with your money in your pocket, get to the market, and you're checking different products from one shop to the other, until you meet the one that meets your needs or your requirements. Now, when you get to the market, as you're going from one shop to the other, you're going from one intermediary to the other intermediary. These are people that perhaps produce the piece of clothing themselves, or are just the world intermediaries. They stand between those that have manufacturers and that have manufactured and those of and we that are coming to the market to buy the assets, to buy their merchandise. So in the financial markets, the equivalent of people like that are called financial intermediaries. These are entities that stand in the gap to link a buyer with a seller. They are entities, and in the financial system, you typically call them lenders or savers, those that have surplus funds, and you say borrowers or spenders, those that have deficits. Now, how does this work? If you have, say, 100 naira in your pocket, and you do not have an immediate need for it, you have options. You could go to the bank, or better still, you could go to a pizza joint and buy pizza. Or you could say, hey, I have no need for pizza right now. Why don't I invest this money? Or why don't I save the money? In that case, you have surplus units. That is, you have surplus funds available to you, and you're looking for an avenue to invest or save those surplus monies that you have. Now, likewise, if you're in need of 100 naira, if another party is in need of 100 naira, you also go into the financial market. You could call on your friends or your neighbors or your parents to say, please, I am in need of 100 naira. Could you give me a solid hand here and give it to me free or lend it to me? At that instance, you are coming from a point of deficit, and you're borrowing money or asking for a gift, so to speak. In the financial system, the lenders or savers in that market, in that system, could go from individual to corporate entities to government entities to foreigners, those with excess liquidity or excess funds that are coming into the financial system to seek money for maybe business. Government will be to fund budget deficits, to pave roads, to build schools, and what have you. Whilst those that have those will be borrowing money in the financial system, whereas the flip side are those that are lending money or lending money on the other side. So, to summarize, the financial system consists of venues, that is, market venues where transactions actually take place. And then you have intermediaries who are the participants in the market. Then you have the instrument or the product. The instrument can range from investable assets to fixed deposits in a bank to a simple IOU. Shegun is lending Philip the sum of 200 naira for 1 month. You will give me back at the end of this month, or you give me back in 2 weeks' time, what have you. So those are some of the instruments that are available in the market. And it's as simple as that. So the financial system, you've been a part of it. You've existed in this market all this while. Some of you might be very conscious of your activities in this market, while some may not. The moment every single product you buy, most products in Nigeria are imported. Possibly it's just your individual person that is perhaps local. And if you ask me, some of you were perhaps even born up, given birth to abroad. So you yourself, you might be foreign as well. And very well, I will jokingly say that you were imported as well. So if you import every single thing that you have around you, then it then follows that you've been part of the financial system. How? You've bought the intermediary that imported that item that you bought from at some point exchanged naira for dollars. The dollars have been transferred abroad to the manufacturer. The manufacturer has shipped the product to the importer here in Nigeria. The importer then receives the goods, sells it to you. You at some point had to borrow the money to buy the item, or you had to save for the money. You have to save the money. By you saving, you've been part of the financial system. By you earning that money, you've been part of the financial system. So the entire financial system happens whether you consciously admit it or not. Now, there are entities we call financial market infrastructures that enable the smooth running, the seamless operations of the financial market. Many of them you've been part of consciously or unconsciously, whilst others you've been agnostic, or you've not really known you've not really known up till this moment that they exist. What are financial markets infrastructures, or what are financial markets infrastructure? They are critical entities that enable the execution of financial system transactions. Then they have adequate operational, technology, and human structures that have been put in place to ensure the efficient transition of funds from a point of deficit to a point of, from a point of surplus to a point of deficit. Now, remember what we talked about, the financial system is the flow of funds from a deficit position to a surplus position. Moving on quickly. So what some of these entities will include payment systems. Some of you perhaps have heard of the Nigerian Interbank Settlement System, NIPS, that enables the clearing of checks. So each time you do a transfer, or you ask your parents or your friends to do a solid and transfer, say, 1,000 naira to you, that entire activity, the moment you log onto an app or you log onto your internet banking platform and you click send, that there's an infrastructure on which that application is riding on, and that infrastructure is a payment gateway or payment system, and a Nigerian equivalent will be the Nigerian Interbank Settlement System. You have other financial market infrastructures like the securities settlement system. When you go to buy, say, equities or stocks, what you typically call stocks in the market, or you participated in the primary market auction of a company and you want to warehouse your securities. So the securities that you've bought or the investments that you've made are typically warehoused in central depositories, and some of them, and certain platforms enable the settlement of that transaction. So you tell your stockbroker you want to buy a particular instrument, say First Bank shares, and the moment that transaction executed, you've provisioned cash to the stockbroker. The next question is, how then does the stockbroker settle, that is, receive the security and part with cash? So they use a system called the Securities Settlement System. A similar infrastructure in Nigeria will be FMDQ Depository, this CSCS as well. These are entities that settle transactions in the market. These are some of the financial market infrastructure. You have FMDQ Securities Exchange. You have trade repositories, amongst a number of financial market infrastructure that you would typically have in any robust financial system. So going on, we're then going into what an overview of the financial market. I have kind of given you an idea of how the financial markets work. It's simply a marketplace where there are buyers and there are sellers. The difference is what commodity or what item is being, or what instrument is being sold. So when you hear the word instrument, we're talking about the product or the commodity that is being sold. I'm using commodity and product here loosely so that you have an appreciation of what we're talking about. But the way you go to a traditional market and exchange cash for products, that's the way you come to the financial market and exchange cash for an instrument or a financial market product. Some of these products or assets will include equities, bonds, currencies, derivatives, commodities as well. There are commodities markets in the financial market. So there are a plethora of financial markets, be it where different instruments are traded. The traditional marketplace for trading financial instruments in Nigeria will be securities exchanges like FMDQ Securities Exchange, where you can buy bonds, treasury bills, or where you can sell bonds or treasury bills. So let's put it in perspective for you. Say Segun, from my example, has 100 naira excess funds that he wants to deploy or he wants to invest. It then follows that where should he invest in? He has made up that decision, but my colleague will also tell you about, give you an idea of the entire process of how to invest further down during the session. But the interesting thing is, Segun has 100 naira to invest. He then does what? He's looking for an instrument to buy, or what we've said, a product, whether bonds, equities. But because I need the money in 3 months, I've decided to say, hey, I will invest in an instrument that will enable me cash out in 3 months. That is, if I'm doing a fixed deposit or I'm doing a treasury bill investment, I'll typically buy a tenor of 3 months. However, I can also opt to buy another instrument with the hope that I can sell that instrument in 3 months' time and make some profit, at least preserve my capital and make some money. So I've got options. So where do I go to? I go into the financial market. I being the saver or the lender, I'm using that word, or the investor, better put, the investor. I go into the financial market and I go through an intermediary that also looks for those that are looking for money. That is, on the flip side, entities or individuals that want to sell their own investments or wants to borrow money from investors or want to borrow money from lenders. So the moment you take your money to a bank to do a fixed deposit, you're a lender, excuse me. And the moment the bank takes it from you, the bank is a borrower. I'm sure some of you do not realize that the banks are borrowing money from you each time you go to put money, to place money with them. That's the reality of what's happening. And you will realize that when the instrument is a savings account, you are told that you are being paid interest on your savings. If it's a current account, the interest is zero. Now, what are the functions of the financial market? It enables, is a platform for borrowing and lending. It facilitates seamless transfer of seamless transfer of money from the point of surplus, that is from the lender, to the point of deficit, to that is the borrower. Some of you have even created pseudo financial markets where you stay. At times you hear someone say, I need money. And you do also know that another person has money. You then broker the transaction and say, hey, this other person needs money. Can you lend them the money? So those are in the simplistic form of it. You've created some financial market transactions, so to speak. But in a structured form, there are entities that have been mandated, that have been licensed under different regulatory frameworks to enable smooth, efficient, fair pricing, proper risk management, in the process of transfer of those assets from the borrower, from the lender to the borrower. Another function of the financial market is price determination. In my example of you going to the eco market, you do realize that at times, if you go with your parents will say, or your guardian will say, do not buy from the first shop. You ask the price from the first shop, the person tells you, okay, for this piece of clothing, it is 85 naira. Then your parents say, no, there's some bargaining. Okay, we'll pay 15 naira. The intermediary says, no, I'm not selling at 15 naira. The best I can part with for this piece of clothing is 80 naira. You then take that price of 80 naira and say, hey, guess what? I'm not going to buy from the first shop. I will go to the next shop, that is the next intermediary, and then price, and then you hear prices in the range of 70 naira. So you begin to have an idea that prices are ranging from 70 to 80 naira. And that process is called price determination. It exists in the financial market. There are structures that have been put in place in the financial market that enables that smooth process of price discovery, price determination, negotiation, so to speak, be it automated, but those kind of structures exist in our market. Information coordination and efficiency speaks to your ability to source information at will, for you to be able, some of you have experienced instances where you want to sell dollars, you call the first, what we call in the parallel market, local parlance, the malams, or in the parallel market, you call the first person, you call the second person, you call the third person to get a sense of where dollars is. That is flow of information. And if that structure does not exist in the financial market, there will be disparity between at what price one party will sell and at what price the other party will buy. Will sell in two different locations, or even in the same location, just due to this asymmetry in flow of information. Then risk sharing speaks to how the risks that are embedded in the process of transfer of assets and cash between two parties, and how those risks are managed. There are a number of them. In addition to that, it also speaks to the risks on the investment. You could imagine you lending Segun your money relative to lending a bank your money. You will naturally assume that Segun is of higher risk compared to you lending a First Bank or a GT Bank your money, because you will assume that Segun can pack up his bags and leave town. Whereas GT Bank and Zenith Bank, the likelihood that GT Bank and Zenith Bank will leave town because of your money or because of the monies that have been provided to them is very slim, because of the structures that have been put in place. Or the likelihood that a stockbroker will take your money and not release the instrument that he has bought with your money to you is slimmer, because of the structures that have been put in place by the securities exchange that these stockbrokers belong to. So moving on, some other functions of the financial markets will also involve the liquidity, how liquid that market is, and that speaks to how your ability to be able to buy one instrument at any point in time, or sell an instrument without necessarily paying a lot or losing some value for selling that instrument. We'll talk about it as we go further down the slide. And let's talk about the different aspects of the financial market, or what we call categories on the financial market. One of them will be the capital market, where you invest, where you trade long-term investments or long-term instruments or products. The other will be the money market. In the capital market is a market where buyers and sellers engage in trading very long-term instruments, including bonds, equities, and any other financial market asset that is longer than 1 year. Now, there are promissory notes that are longer than 1 year. We tend to say between 1 year or less. Some other jurisdictions globally will say less than 2 years. So it depends on the location. But generally, globally, a safe standard is to say any transaction more than 1 year is capital market, and any transaction on an instrument, I beg your pardon, on an instrument that is more than 1 year is capital market, and on an instrument that is less than 1 year is money market. We've dwelt on some of the products that make up the capital market and the products that make up the money market. Money market instruments will include your fixed deposits. Most fixed deposits are less than 1 year. Commercial papers are typically less than 270 days. Treasury bills are typically 1 year or less. So those are some of the money market instruments. We'll talk about them further as we go on in the slide. Another categorization of financial markets will also be the primary market or the secondary market. The primary market speaks to where transactions are between the original lender. So let me give you an instance. Let's say First Bank wants to borrow money from you. So they issue a commercial paper. The bank issues a commercial paper. Now you have excess funds, so you part with your money and invest in the commercial paper. You then have this paper that this commercial paper instrument that you've invested in that is supposed to mature in 9 months' time. That activity is a primary market activity because you are investing in the commercial paper from the original issuer, the issuer here being First Bank. Let's say 3 months down the line, you then decide, hey, I need some money. I can't wait till 9 months' time to get money. Rather than go and borrow from another party in the market, why don't I just sell the commercial paper that I have? Remember, the financial market exists. The financial market is liquid. There are intermediaries. There is price discovery. You've checked the price on the market. You've seen that this commercial paper, you can sell it above the price at which you bought it. Then what then do? You then go ahead and then sell your commercial paper in the market. Remember, the original lender is who? Is First Bank. You are the buyer. You've then decided you want to sell to another party, a new buyer. You are selling the instruments in that market without it impacting on the original issuer, which is First Bank. So it means that you are transferring the ownership of that commercial paper from yourself to the new buyer. Now, on the day when that transaction, that entire process of selling the instrument in the market from the initial buyer to a new buyer is a secondary market activity, and we tend to say that those activities take place on exchanges in a structured market, whereby the record of the old buyer is replaced with the record of the new buyer, such that when it's time for First Bank to pay back the loan, First Bank will pay the money, pay the debt to the new buyer and not the old buyer. First Bank will pay both principal and interest to the new buyer. So financial market participants and their roles. We have the regulators, entities like the Securities and Exchange Commission that regulates exchanges, central depositories. The general activity in the entire capital markets are regulated by the SEC. We have other participants, other regulators, including the CBN, that regulates activity in the money market segment. In terms of, they also regulate the banks as well, and also regulate activities in the money market and the foreign exchange market as well. We have exchanges. Exchanges is a fancy name for a market. Exchanges is a fancy name for a platform where financial markets is a fancy name for financial markets where financial instruments are traded. As far as you won't be wrong when you say that an exchange is a marketplace, just like your Ladipo market or your Echo market or any market in the US or UK. An exchange is just a marketplace. The difference is that the product traded in that market are financial instruments or assets. Then you have your banks. These are dealers in the market as well. These banks also are dealers on exchanges, on the FMDQ platform. We have all the deposit money banks in Nigeria licensed by the CBN as being members of the FMDQ Securities Exchange. They trade all the bonds, T-bills in the market. And if you want to invest in any of these instruments, please, by any means, as my colleague will share with you later on, you can approach any of these participants. Then you have investors. You have investors like yourself. You have issuing houses that we've spoken to. Those are the parties that are borrowing. You are issuing houses are intermediaries, rather, that help connect the issuers, the borrowers, to the investors, the lenders in the market. And you have the issuers that we've spoken to earlier, who are the intermediaries, who are those that are borrowing in the market. Now, in some of the common investment vehicles, bonds, we've spoken to it earlier, they're long-term investments. Mutual funds are platforms, bonds are long-term investments, rather, are long-term fixed income investments. So if you lend me your money beyond 1 year, you most likely will be investing, you most likely will be issuing a bond. And however, bonds are only issued by non-individual entities, that is banks, corporate entities, government agencies, supranational agencies like World Bank, IFC, and the likes. Individuals do not issue bonds. Then you have mutual funds. Mutual funds aggregates money's pool of investments amongst a number of investors, and they are managed by professionals in the industry that then invest the monies in a number of instruments that they would have pre-informed you about. We have stocks. Stocks are long-term investment as well, but they are units of ownership in an entity. If I tell you that I bought shares or stocks of First Bank or Zenith Bank, it means that I have ownership in First Bank or Zenith Bank. Treasury bills. Treasury bills are short-term investment, short-term instruments issued by the sovereign government, like the federal government in our own case, the federal government of Nigeria, as they issue these instruments and collect money from the general public to fund budget deficit, to fund the budget and fund government expenditure. We take it one step further. We talk about real estate. Real estate are fiscal investments, properties, landed properties, fiscal structures that you can invest in. There are different structures. You could buy a land, you could buy a house, you could buy a commercial property. All of those are real estates that you could invest in. Then we have fixed deposits, which are investments with banks, whereby you part with your money for a pre-agreed number of days with the promise to come and to take back your money at the expiration of the timeline. Then you have commodities as well. You can invest in gold, you can invest in silver, in diamonds, and they are store of value as well. So these are some of the popular commercial investment vehicles. So at this point, we'll be taking questions. We'll be taking questions at this point. I think there are a couple in the chat room. Okay, one question here I see is, please, does FMDQ only mean financial markets? Okay, FMDQ is a financial market infrastructure. It includes a number of critical financial market entities. One is the exchange. Okay, let me start with this. FMDQ, and I mean FMDQ here, including all of its subsidiaries, including FMDQ Depository, FMDQ Securities Exchange, FMDQ Clear Limited, FMDQ Private Markets. These are all critical financial market infrastructure that participate in the Nigerian financial market. So we provide several financial market infrastructure in the Nigerian financial market space. So we do not literally mean financial market, but we have platforms, entities that contribute, that are critical to the Nigerian financial market. Are there any other questions? And okay, it's been brought to my attention that you might perhaps be asking the meaning of FMDQ. That acronym, that name FMDQ. FMDQ has no, that's not a meaning. The name FMDQ is the name FMDQ. There's no definition of the term FMDQ. Yeah, if that's what you're referring to as well, I just thought I should put that as well out there. All right, if there are no questions at this point, we'll be moving on to the next session. But please, by any means, if you have any question, need for clarification, please put it in the chat box or in the Q&A section of the presentation. All right. Okay, I see. I hear there are new questions now. How can an individual decide what instrument to invest in? Okay, brilliant question. I will save that for the session with my colleague Shobo Ali, where he will be taking you through the process of investing, how to invest, and all of the works. Yeah. So just save that question. It's been noted. We will address that question when we get there. So let's go into more details of some of these financial market instruments or products. Stocks, also known as equity, also known as shares. So you hear some people call it shares, some people call it equities, some people call it stocks. Then it means one and the same instrument. Now, so let me give you a little background as to why, how shares has come about. Let's say I want to set up a car wash business, or say I want to set up a car dealership business where I'll be selling cars. And I have, say, ₦1 million, but guess what? I'm able to, the renting, I need to get a location, and that location will cost me, say, 800,000 naira. You do realize that the moment I buy that property, I am left with 200,000 naira, and yet I do not have a single car, a single product, which in this case are cars that I need to sell. What options are available to me? I can go to borrow money from friends, families, to raise money to buy merchandise to put in my newly acquired property. I could also explore the option of going to the bank to borrow. But if all of these options fail, one option that is also available to me is to sell a portion of my company. So today I own the company 100%. What about selling a portion of it? Say sell 20% of the company and raise additional, since I sell the 20% of the company for 500,000 naira. I'm able to raise capital by selling a portion of my company to new investors. That portion I sell, the instrument, the vehicle via which I sell that portion is what we call shares. That I am selling out of the total shares I've registered with the Corporate and Affairs Commission. I'm selling a portion of those shares to new investors. That initial selling of those shares is a primary market activity because I'm the original, the company is the one selling the shares and taking the cash and admitting new shareholders. We call them shareholders. So largely you go into the market to raise, to issue shares and raise money because you are in need of capital as a corporate entity. And these are largely done by corporate entities. Individuals do not sell shares. Governments do not sell shares, but a government entity that is registered as a corporate, as a company rather, can sell shares. So an example of that would be the Bank of Industry. The Bank of Industry is owned by the CBN and some other entities. However, there are also individual investors or corporate investors as well. So the Bank of Industry can also sell shares, or Shegun and Sons Limited can sell shares as well, largely to raise capital. And why would you want to consider investing in shares? Historically, shares have been seen to outperform inflation. Shares have been seen historically because they gain value over time. As the company makes money, the tendency exists and pays dividends or pays a portion of its profits out to investors. The tendency exists for the shares of that company, the value of the shares of that company to increase in value. And by so doing, the tendency also exists that the appreciation in value tends to exceed the inflation rate in the industry. That is the rate of increase in prices of goods and commodities and goods and services in any country. So putting it in perspective for you, if you buy my Segun and Sons shares for say 100 naira at the initial time the shares were issued, and the shares are being traded in the market, the tendency is that and Segun and Sons is making money. The tendency exists that Segun and Sons prices will go from 100 naira to say 130, whereas the inflation in Nigeria is at say 17%. So you are doing better than inflation. It means that at the end of 1 year, the value you will get for selling your shares, which is 130, will be more than the value you would have paid for an item that has moved from 100 naira to 117 due to inflation. Then there are other investment sentiments. You could use it to store value for your children. You could use it to save for the rainy day. Maybe you want to buy a house in 15 years time, or do a major investment in 10 years time. You could also decide do a major construction rather in 10 years time, or set up a company in 10 years time. Long-term investment, please. Emphasis on long-term investment. Also consider it. There's the likelihood of higher returns as one of the advantages. Income from dividends, income from stock splits. Then they are typically highly liquid if you invest in entities that are traded on a securities exchange. However, it is very volatile. Prices and equities are very volatile. In stocks, very volatile, meaning that the likelihood of prices fluctuating on a daily basis is very high compared to the alternative, say fixed income, maybe bonds. Prices can go to 120, come down to 118, go back to 123, come back to 121. So prices are very volatile. So you need to put that in mind when you're going into equities. It's a risky investment and there are no guaranteed return. If Segun and Sons is not performing, is not making good money, the tendency exists for the share price of Segun and Sons in the market to decline well within the market. The next instrument we'll be talking about will be bonds. Bonds also are long-term investments. They are largely fixed income investment, meaning what? It means that rather than sell my shares on the market, I decide to borrow long-term monies in the market. Say I approach you and say, I will issue a bond to you, meaning that I owe you, the company owes you monies for say 5 years, and then we'll pay you interest called coupons every year or every 6 months for the money that you've given us. So you give us 100 naira and we pay you 5% every year for the instrument for 5 years. Then at the expiration of the 5th year, we'll then return the principal of 100 naira to you. So that's how bonds work. There's some of the terminology, some of the terminologies you will hear will include face value, coupon rates, that is the interest rate. The face value means the amounts that has been borrowed, the principal amounts that maturity, the coupon date refer to the date when interest is paid. The maturity is the date, the expiration date of the bond. Then the issue price will be the rate, the amount you part with at the point when you're buying the instrument at the point when the instrument is being issued. Bond issuers will be any and everybody except individuals. So sovereign entities like federal governments can issue bonds. Subnationals like states, local governments can issue bonds. Corporate entities can issue bonds as well. Quick question, quick teaser I'm going to ask you. What's the longest tenure of bonds that you think exists out there? Give me a wild guess. Put your responses in the chat box. Just tell me the longest tenure. Is it 5 years? Is it 3 years? Is it 10 years? How long do you think a bond can be issued for in the market? So I see some of you are responding. While you're responding, let me quickly touch on the advantages of investing in bonds. Okay. Some of the advantages is the fact that there is tendency for the investment return, the interest, to be fixed. Most often than not, the return, the income earned on fixed income instruments like bonds are indeed fixed. But there are instances where they may not be fixed, but in some form as well. At least you have a sense of what exactly you are going to get. They are less risky compared to stocks. They are true, and this is very valid to the extent that you do not sell before the maturity of those instruments. They are less volatile, very true. Prices are a lot more stable compared to stocks. Bonds have clear ratings. When you want to issue a bond, you must a rating agency must rate that bond issuance to give investors a clear idea of the kind of company they're investing in, what their exposures are, where they will be getting money to pay you back, all of those kind of details. So issuing a bond is not a joke. It takes a lot of rigor in the market, and the regulator, which is the Securities and Exchange Commission, SEC, has stipulated a lot of rules or requirements to ensure that indeed, when a bond is being issued, adequate care are being taken to provide investors with sufficient information to enable them make their decision. What are disadvantages of investing in bonds? Investment returns in bonds are also fixed, whereas equities, you can hear that the dividends that are being paid on an equity investment is significant because that company made so much money in that particular year. But in the case of a bond, okay, let me put it in perspective for you. If Shegun and Sons Limited issues a bond and also issued an equity or shares in the market, and we made a lot of money in a particular year, we will pay the bondholders the exact money we promised them from the beginning, the fixed interest rate we promised from the beginning. But we have the prerogative of paying the shareholders a lot more money out of the total funds that were the total income that were earned in that particular year. So it's a disadvantage to the bondholders and an advantage to the equity holders. But the reverse is also the case in a year that we did not make so much money. We are still under obligation to pay the fixed income holders the exact amount we promised them. But the shareholders, we can say, hey guys, this year we did not make so much money. In fact, we've used almost all the money we made this year to pay the bondholders. This year, you guys are not going to get any dividends. So you then appreciate what are the advantages and disadvantages of each aspect of this instrument or of each of these instruments. Larger sum of investments are needed. Yes, when it comes to bond, you can imagine investing 100 naira and there's an interest rate of 5 naira and you're looking at it, hey, come on, I invested 100 naira, all I'm getting is 5 naira after a year. Or you get a total of 25 naira after 5 years. From that perspective, you can look at it and say, hey, the investment is small. But if you're investing 1 billion naira, for instance, you then have 50 million. That's some sizable amount of money every year for 5 years, totaling about 250 million in 5 years. That's some good money that you've earned over the 5 years. So tendency exists that when you're investing in bonds, you might prefer it when you have a lot of money, but there is nothing stopping you, as Shoboali will explain to you, that you could also invest small amounts of money using different instruments like mutual funds. Now, then there are direct exposure to interest rates, and these only exist if you decide to sell in the market. If interest rates go against you, you can lose some money on your bond investments if you sell before the maturity of the instrument. So let's quickly go to the chart and let's see. Wow, interesting. So I see someone say 20 years. Yes, true. You can have up to 20 years, but that's not the maximum. Okay, good one. Another says 15 years. I see a 10-year and 50 years. Yes, in Nigeria, the maximum tenure we have is the 30-year FGN bond. I think it's 2049, maturing in the year 2049. Some of you will have children and grandkids by that time. But that's not the longest tenure we've seen. We've seen as much as 100-year war bonds in the UK. I think issued in the early 20th century. We've also seen the 1,000-year Canadian Pacific Railway bond. And we've also seen perpetual bonds. That is a bond that will keep paying you interest forever in perpetuity. So bonds can be issued in perpetuity. But typically in Nigeria, the longest tenure you will see is the 30-year bond. We've not seen any corporate entity go beyond 30 years. But abroad, in the US, to be precise, you can see a corporate entity issue bonds that are longer than 30 years. Okay, interesting. Someone actually said, Femi, good answer, good answer. No tenure limit. Yes, we also have perpetual bonds. Okay, good answer, Femi. All right, going back to the slides, the presentation, let's talk about mutual funds. So now you could imagine that I've given you so much information. We've talked about there are risks, there are likelihoods that you can lose money if you're selling, there's volatility, there are a number of factors, there are a lot of information that you might need to track at the same point, at every point in time. However, you may not have the expertise. Some of you may be new to it, whilst others might have some level of experience. So if you're not a professional, how then do you access these investments in a safe format? One of the avenues that you have is what we call mutual funds. Mutual funds. They are collective investments programs or collective investment schemes that are actively managed by professionals, regulated by industry regulators, particularly the Securities and Exchange Commission. They pool together funds from investors, and these professionals or fund managers invest those monies in specified instruments, equities, fixed income, money market instruments, multi-assets, mutual funds, that is a little bit of equities, a little bit of bonds, or you can say, okay, I want to invest in equities markets, but I want a mutual fund that is aggressive, that invests in new startups or growth companies like Tesla or Amazon. Amazon is not a young company; it's been around for over 20 years, but they still look at themselves as a growth company. You could invest in new startups like Flutterwave, or it could be anything. So such mutual funds exist that even within the equity space, they can target specific companies. You could say you only want to invest in ethically compliant or socially responsible entities. You will not invest in companies that make not that they are not contributing to the society, but your preference, you do not want to invest in companies that make beer, alcoholic beverages, or make tobacco or similar companies as such. Or you could want funds that are specific to your religious belief. Halal compliant funds, Islamic finance compliant funds, or Islamic rules compliant funds. So there are a plethora of, or there are a number of mutual funds that are out there that you could invest in. And I think Shobo Ali will touch on a couple of them. So the way it works is that all the investors will give their monies to the fund manager. The fund manager pulls the money together, does significant research, Determine, based on the rules of that particular mutual fund, select securities to invest in those securities or instruments, and the returns are then shared back to the investors, less a fund management fee. You can use, typically most funds are diversified, so it gives you room to invest in a number of things. You can use 5,000 Naira to invest in bonds, in T-bills, in equities, and you feel cool about it. There's that feel cool factor that you say, hey, I've invested in bonds, T-bills, and equities, whereas you just invested maybe 2,000 Naira. Yeah. And guess what? If you are taking that 5,000 Naira or 2,000 Naira to go and buy each of these instruments individually, you then realize quickly that the cost of even investing those monies, going from one broker to a bank to another entity, you would have exhausted your money in transportation or making phone calls or setting up accounts before, and you then end up with zero that is available for investment. But using mutual funds, these are very good assets, especially for new starters or intermediate level of experience in the market. You can use that to invest in this. You can easily invest in these instruments, a lot of instruments with very small amounts of money. Then it's professionally managed. These managers, not to say that you may not lose money in equity mutual funds. You can rather. You may lose money. However, you're coming from an advantaged position where there's a professional that actively tracks this every day, 24 hours, 247, that is every day of the week, every week of the year. Their responsibility is to ensure that they actively track these funds and monitor the performance of this fund and can sell and buy new investments as the opportunity arises. Then some of these disadvantages that exist on the underlying instrument still exists. By you investing in an equity fund does not mean that you are not exposed to the volatility in the prices of the underlying instruments. So as the prices of the equities increase and fall, that is how the prices of those mutual funds will also rise and fall. However, the volatility of that mutual fund can be better managed because you have invested in a basket of equities or instruments. Then there's the part that you have to pay professional fees. You have to pay the fund manager for the services that they've rendered. Some good fund managers charge below 1%, some charge as low as 0.3 or 0.5%. So your own work at that point is to quickly check what is the fee that the fund manager will check. Is a very critical question you need to ask every fund manager, and to also track their performance. However, you have no control of the mutual fund or your investment. The fund manager, you vested that control on the fund manager. Now let's take it further. Commodities. Very interesting. Some of you might have dabbled into this, and probably one of the most risky investments that you could perhaps indulge in. It largely involves the transfer of physical, tangible assets from one party to the other. They will include metals, energy. Okay, while I've said tangible, there is an exception to that where you could sell power, electricity. You could sell electricity in the commodities market as well. But largely, the commodities market is a physical assets market. You could sell crude oil, livestock, agricultural produce, sugar, cotton. So you then appreciate why I tell you that you need to actively track the market. And I give you indicators. Recently, you had the fact that there were rumors that the pump price of petrol was going to go up. The reason for that was because the price of crude oil globally was rising. So if you have an idea of where to check the prices of crude oil, you can then easily predict that the prices of local petroleum products will rise. I give you another example. If the prices of sugar is going up, you can easily tell that the prices of soft drinks in Nigeria will also go up. If the prices of PET bottle, polyurethane that is produced from crude oil is going up, you also have an idea that the price of plastics in Nigeria will go up. So these are typical indicators that you track. So whether you admit it or not, you participate in the financial markets, you have just not been so conscious about it. And it's not so much that you should go about every day tracking, what's the price of rice, wheat, maize, crude oil, and all of that. They are not that volatile, but from time to time, you just want to check in on it. And when you hear on the news that the prices of crude oil is going up, you quickly have at the back of your mind that, hey, Nigeria is going to be making a lot more money because we are selling crude oil. However, Nigeria, you as citizens in the country, you will likely as well be parting with what? You'll be parting with cash, as potentially the cost of the pump price of petroleum products at filling stations will potentially also increase. What drives the prices of this product is largely supply and demand. During the COVID-19 pandemic, at the height of it, I think it was in May 2020 or April 2020, the price of crude oil went down to as low as what? Who can give me a guess? Please put in the comments. Tell me the lowest that you think that the price of crude oil potentially could have gone through. I'm sure many of you will be shocked. So put in the comment box and tell me the lowest that the price of crude oil went to. Because first of all, let me tell you, demand went to almost zero. Demand for crude oil went to as low as almost zero. Storage tanks were filling up very fast because the way crude oil works, the moment you drill, whether you want the crude oil or not, it will pump. And once it's pumping up, you just have to divert it into storage tanks. The cost of shutting down a crude oil well is so significant that you are better off just storing the crude oil that is you are pumping out of the ground rather than you closing that oil well. So storage tanks were getting filled. So put in the comment box what do you think were the lowest prices that were recorded in 2020 for crude oil prices, for instance. So it gives you one thing, it tells you how demand and supply can affect prices. Two, it tells you how volatile these prices could be. Yeah. So let's go ahead. Advantages, I think I've spoken to that. Volatile, bad weather can mean significant impact on agricultural produce. However, the advantage is that you can invest in a number of items. You can invest in gold, silver, diamond, copper. One interesting one that is making the rounds now is lithium and cobalt, which is a major additive into the making of, guess what? Electric cars, the batteries for electric cars. So the way you use crude oil and petrol for powering cars in Nigeria today, and the new generation is using lithium and cobalt to make batteries that stores energy, that powers these, that stores electricity, that powers these cars. So that's another interesting commodity product where, hey, please make your research. This is definitely not a recommendation. Do your research, speak to a professional, speak to a stockbroker, or what have you. Shobo will dwell a little bit more. My colleague Shobo Ali will dwell a little bit more on this when we get there. Okay, let's look at the chart. I think I have 6. I think many of you have been using Google. So someone got it spot on, -37, yes. Crude oil first went to $5. Everyone was like, no, I think it did 15 first, went down to 12, and everyone was like, how low can it go? And the general language was that it would go between 5 and 10. Guess what? It hit 5. I think within 2 days, it went from 12 to -2 to -5 to -37. What does that mean? It means that I am selling crude oil. However, I will pay you to buy the crude oil from me. That doesn't make sense, yeah? But that is what happened. And why did we get to that point? Because crude oil went very, very low. Because the supply went so much high, storage tanks across the world were getting filled and getting filled very fast. vessels, crude oil vessels globally were filled and were at the high seas and nobody was buying. The issue was now that, hey, if we short these oil wells, we'll be spending a lot more on this crude oil that we couldn't sell. Guess what? Whoever wants crude oil, we'll give you for free, and we even pay you for it. Just buy. Please buy from us so that we do not, so that the storage tanks do not overflow. And that was when the crude oil went as low as negative $37. Now imagine within 1 year, it has grown from negative $37 to as high as I think $65 or $70 as of yesterday. So that is how high and how volatile commodities markets could be. All right, brilliant stuff. I think we have some very brilliant people in the room today. Maybe I should say smart people in the room, because I think some of you might be leveraging the benefits of Google. All right, good stuff. Now, derivatives, interesting one, and I will not dwell so much on it. What I will explain at this point is that imagine that you wanted to buy crude oil last year, but you need crude oil this year. We're in 2021 March. However, you need it in 2021 June, and you knew as far back as last year. When you saw crude oil prices going to negative 37, what do you think you can do? Option available to you is to go and buy it in the market and store it. You know, someone is paying you to even buy it and store it. But if your tank gets filled and you still know that you will still need more in the future, you can buy all the crude oil you need at that point in time. What option is available to you? That is where derivatives comes in. It helps you manage your risk. It's a risk management tool whereby you can lock in long-term prices or long-term commitments on underlying instruments, be it bonds, equities, commodities, whatever it is. You can lock in long-term prices on those instruments, and then with the hope of buying it in the future at the price that you've pre-agreed, say a year before now, or 2 years before now, or 5 years before now. You can lock in 5-year contracts. What does that mean? It means that today, March 2026, you can determine at what price you will be buying crude oil 5 years from now. You lock in that price, and you will not pay the full value of that crude oil today. You only pay a commitment token, and you provide some collateral to say, in the event that those prices go against you, you can draw on the collateral that you've provided. Excuse me. You can draw on the collateral that you've provided to make provision for the variance in price. Now, what does that mean? It gives you a lot of flexibility. Imagine you can do that on dollars, for instance, whereby you know everything imported in Nigeria, everything used in Nigeria is imported, and as such, and some of you might say not everything, but guess what? The raw materials that were used in making those items were also imported, or some of the inputs into the output, into the product were imported as well. So from that perspective, you also know that you're automatically exposed to foreign exchange risk. So what can you do? You can today lock into, if you're going to import a particular item 6 months from now, you can pre-agree today what the exchange rate will be for that item you're importing 6 months from now. Yeah. So those are some of the benefits of derivatives transactions. However, they are very, very, very volatile and also very risky, because you require a level of expertise. There are a number of variables that are moving at the same time that can go against you or in your favor, depending on how it goes. It's perhaps one of the most volatile instruments in the financial market. All right, I will be taking questions at this point. Please put in your questions in the chat box. If you have any questions, if you have anything that you do not understand, if you have any item that you need us to further clarify on, please include in the chat box below. Now, before I close my session, let's talk about benefits of investing. What are the benefits of investing? Pretty much, I suspect that you know most of this. There's the benefits of making additional income. There's the benefit of using it as a store of value. That is, you're using it as a saving, as a medium to save money. You're using it to accumulate. You are investing so that you can accumulate monies, and that you will then use to buy a house in the future, or buy a house, or get married if you're not married already, or pay school fees, or meet any of your future needs, as the case may be. It can also serve as a support when in the event of a financial crisis. They typically say that when you have money in your pockets, you have a relatively more more attitude or perspective to life in terms of confidence. You're a little bit more confident relative to when you do not have investment, and that goes for investment money, and that goes for investment as well. The more investment you have, the more confidence you have about your financial position, and your ability to be able to absorb financial shocks or crisis, and it gives you a sense of security, like we've said before. Okay, I think we have some questions coming in. How does investing help manage inflation? Brilliant question. So you do realize that in the last 1 year, the prices of goods and services have significantly increased in Nigeria. I think one common one that all of you will be experiencing right now, or we are all experiencing right now, without exception, will be water. I think everybody in Lagos buys water, or everybody in Nigeria. Okay, that I'm gonna put a caveat to, because I hear that others use other means of. But if you buy water, whether bottled water or the dispenser bottled water as well, you do realize that it has increased for bottled water as much as 100%, for dispenser water as much as maybe 30, 40%. What that means is this: if you saved 100 naira 1 year ago, you would have been able to buy 2 bottles of bottled water. Today, you'll be able to buy just 1 bottle. But if you had invested your money, your 100 naira, and you had generated, say 100, your investment is now worth 120, you will still be able to buy 2 bottles of water and have some change. That is an extreme example of what we're talking about, but that gives you an idea of how investing helps you manage inflation. If you had kept that 100 naira in your pocket or under your bed without investing it, today, the 100 naira you would have kept, you will not be able to get the same value of goods and services that you would have enjoyed 1 year ago due to inflation. So by investing, you can reduce the impact of inflation or eliminate the impact of inflation on your I use the word eliminate loosely because it will still impact you. If inflation does not exist, it means that you would have still been able to afford all of the things you could afford 1 year ago and even more. But at the minimum, you'll be able to afford what you can afford 1 year ago. Somewhat, you would have eliminated the impact of inflation. Or you would have been able to reduce the cost rather than go and borrow to buy 2 bottles of water. Now, you would at least be able to buy 1.5, or buy 1 and share 1 with another person that wants to buy, but does not have sufficient money as well. So those are the kind of benefits that investing brings to the table in terms of inflation. So is what's the difference? The difference between what's now? Oh, open and closed mutual fund. Wow, interesting question. So open mutual funds means that I think the full term is open-ended. Open-ended mutual funds mean that at any point in time, the fund manager can come to the market And right, I take that back. The fund manager receives money from each investor directly and invests in the underlying instrument. And whenever an investor wants to take his money back, will contact the fund manager, and the fund manager can sell the underlying instruments and give the investor back his money plus whatever return he has made. In a closed-ended mutual fund, the fund manager comes to the market as if it's a company and raises a fixed amount of money that does not change. It raises a fixed amount of money and goes to invest the money in the underlying, in the instruments, in the financial market products. Now, whenever the investor wants to take his money back, he will be getting returns from the closed-ended mutual funds periodically whenever the fund manager pays. However, the difference is that whenever the investor decides, I want to sell my stake in this mutual fund, you do not go to meet the fund manager. Instead, you go to the market and sell your ownership in that closed-ended mutual fund. So the mutual fund is run as a company, is run as if it's an entity on its own, and investors part with money and invest in that company in a primary market. The secondary market for it is that you go and sell your ownership in that closed-ended mutual fund. You sell it to another investor in the market. I think we used to have Nigerian International Debt Fund or something like that in the past. I don't know what the current status is. That is registered on the Nigerian Stock Exchange. Is a closed-ended mutual fund, but there are not a lot of them. Another closed-ended mutual fund, or something that looks like a closed-ended mutual fund, are what we call REITs, real estate investment trust schemes. Once you buy it, you have a stake in the properties that they invest in. If you want to sell it, you just sell your stake to another investor. You do not go to meet the fund manager or the trustee to take your money back. You sell your stake to another investor interested in that product. I hope I've been able to answer your question. So please, what's the difference between open and closed? And okay, we've discussed that. Please shed more light on the relationship between the interest rate on bonds and the price of bonds when it is being traded in the secondary market. Okay. You are going to bond 102. Okay, but let me just give you high level, because let me give you high level what it means. There's an inverse relationship between the interest rate of a bond and the price of a bond. What does that mean in a nutshell? It means that if I buy a bond at 100 and it's giving me an interest of 5% every month, and it's a 5-year bond, if in year 3 I decide to sell the bond, remember it's no longer a 5-year bond, it has reduced to 2 years to maturity. So at the end of year 3, I decide to sell that bond. Wherever I'm going to sell it to in the market, we'll be comparing the price, the yield on that bond, which I initially got at 5%. We'll be comparing the yield of that bond to any 2-year instrument that is in the market. And if interest rate for 2-year bonds or 2-year products, fixed income products in the market at that point is 7%, it means that he will be expecting you to sell that bond to him at a yield of 7%. And for you to derive a yield of 7% on a 2-year bond, it means that the price he will be paying for it will be lower. What does that mean? It means that at maturity, he's still going to get 100, but he wants to get 7 naira for every face value of 100. It means that what he has to part with for the issuer that is going to pay out interest rate of 5 is that he has to pay maybe a 98 or 97. So invariably, it is derived that the yield will be higher at that point and the price will be lower. So that's why they say it's an inverse relationship. As yields go up on as you draw to maturity on a particular bond, the value of that bond is going down. Likewise, as yields are going down, the price is also going in the opposite direction, that is, it is going up as you hold an instrument towards maturity if you sell it in the secondary market. So that's why we say that bonds are risky assets as well. Yes, there are fixed income products. If you hold it till maturity, then you don't need to worry about yields going up, price coming down. No, you paid 100 for it, and it's paying you a coupon of 5 naira or 5% every year throughout the life of the bond. Simple and straightforward. But if you decide to sell, the interest rate in the market at the point when you are selling it is something you need to consider. So what are the kind of investors that will typically invest in bonds and go to sleep and not worry about it? Entities like pension fund managers, where your pension fund contributions that you start your career today, you are 25, you are going to work for another 30 years. You do not need the money for another 30 years. So they will look for 30-year bonds, 20-year bonds, 25-year bonds. By the time you're 20, and by the time you are 40 rather, any monies that you'll be investing they will typically invest it in maybe 15-year bonds or less. They won't invest more, or maybe more even, depending on the kind of structure that they will be paying to you, how you'll be collecting your money back from the pension, from the pension scheme. So those are the kind of parties that love bonds. Banks also like bonds because whether you are on a daily basis, as you place money with them and take it back from them, there is that minimum balance they always have that typically doesn't go away. Some people will bring today, others will come and take, but there's just that maybe 30% of every deposit always remain with the bank. So at times they can say, okay, let's take 5% of it and put it in a 5-year bond, because we really, typically this money never leaves us. So you have banks as well, and other investors that have long-term plans. So if you're 25 now and you feel in 10 years time you want to buy a house, you should be able to you can consider investing in a 10-year bond or less, so that by the time it matures, there's no need for you to sell it, but by the time it matures, you can then take all the money and buy the house you want to buy. However, note that if for any reason you decide to sell before maturity, you might be exposing yourself to risk. All right. Are there any other questions? Okay, I think that's it. All right. At this point, I'll be handing over back to my colleague. By the way, I think I omitted something earlier. I did not give you my name. My name is Segun Akintoye. I work with FMDQ Clear. I work in the clearing operations function. Thank you, and thanks for the active participation. I really enjoyed the session.
Thank you so much, Segun. That was a very interesting session, and I hope everybody learns quite a bit from that segment. Some things will be reiterated during the Investing 101, so please have your questions ready for that. That will be practical sessions on how to invest in some of these financial instruments that Segun has talked about. So thank you, Segun. Moving on quickly, we're going to take a quick break. Stretch your legs, and I'm going to hand over to my colleague Bede, who would be taking you through this session. So you can take a loo break, but also come back very quickly so that you can participate. There are lots of prizes to be won in this segment, please. Thank you. Bede?
Thank you, Kofo, and thank you, Segun, for two very educative sessions. Now, on to the fun parts. Hello, everyone. My name is Bede Bonwomo. I work in events and brand operations here at FMDQ. Now, I know you've been sitting still for a while and we need a few minutes to stretch. So now we have it. However, this is going to be a stretching time with a bit of fun. I have a lovely game with prizes to be won. So please, everyone kindly participate. The first three fastest fingers will get something for each of my sessions. So while you stretch your legs, I want you to find the following items which are most likely around you. The fastest three people will win my prizes. Now, please listen carefully. So the 5 things around you: a cup, can be a plastic cup, can be a glass cup, can be a mug, that will pass. 1 pen, a book, religious books are allowed, a face mask, and a snack. I'll allow a plate of rice or even eba to pass for a snack. So please, let me see what you have. You can turn on your cameras and your mic once you've gotten the 5 items, and we're on hand to find out who or the 3 people that will be the fastest. So let me start again. A cup, a pen, a book, a face mask, and a snack. So I'm waiting. Who do we have? You can turn on. Aha, I have Mario. So Mario, can I see what you have?
I have a snack.
Okay.
Indomie.
You have a snack, Indomie, cool.
I have a pen.
Good.
I have a book.
Okay, what book is that?
It's a notebook.
Oh, okay. Okay, I'll let that pass.
A face mask.
Good.
And a cup.
Wow, nicely arranged. So Mario is first. Who is the second one? Thank you very much, Mario, for participating. Who is the second one? Victoria is second, but I can't see Victoria's items. Okay, Victoria, let me see your items.
Okay, I have a pen.
You have a pen, good.
I have a mug.
A mug, perfect.
I
A book, okay. Words to live by 14's good.
Good afternoon.
This one, you have a plate of food. That's fine. Are you the Victoria from yesterday? So it's somewhat prepared.
and I have a face mask.
You have a face mask. Okay, thank you very much, Victoria. So who is third? Rosemary says Abdul Rahman is third. So Abdul Rahman, can I see your items, please?
I have a book.
Okay, you're very serious. So insurance principles and okay, perfect. I can see a mug there. Where's your face
I
mask?
have a cup. Yeah.
Good.
My face mask. Then a
Good.
snack.
I like
and
it,
a
biscuits.
pen.
And a pen, perfect. Thank you very much, Victor Abdurrahman. So thank you, Mario, Victoria, and Abdurrahman for participating. I'm happy you guys were fast, and I hope you had time to stretch. So we're going to move on quickly to the next activity. So if you didn't win this time around, you're the first time you can win this time around. Now, the next activity is a crosswalk puzzle. In the puzzle, you'll see 10 financial market terms that you have to find. Once you find them, arrange them in an alphabetical order. Please submit your answers to the host only. I am a host, I'm a co-host, Kofo is a host, and Rosemary is also a host. The first 3 to submit will receive a prize. So just submit all at once. Don't send 1 word per time. I want to start my timer before I say go ahead. During the gifts are worth it. Okay, so the crossword puzzle is ready. I'll take a second to familiarize your eyes, and 5 minutes starts now. So I'm going to be talking whilst you're doing this. I'm be giving small expo so that we can help ourselves. This is not, I'm not cooperating. This is no exam malpractice, but let's just see how it goes. Please, I need fast fingers. I need fast eyes. You see words across, words from the left to the right, right to left, words below. Please submit all 10 at once. Submit all 10 at once, please. I've started getting some messages. It's competitive. Okay, let me give one expo. First line, that's my expo. In another minute, I'll give another one. Everything, Shegun, most of it, well, let me say everything. Most of the financial products that Shegun mentioned, you can find it here. A lot of them actually. Oops, I just spotted another one. I wasn't even looking. I'm sure you guys are nailing it. So we have less than 3 minutes left, or rather about 3 minutes left. So do you know what can help you? Just by typing them out in your chats. As you find one, you type it out. As you spot another, type it out. Just keep typing them so that when it's about time, you can just push everything at once. Don't wait till you find all of them. Just keep typing them. I wanted to give another expo, but Kofo said I shouldn't, so please blame her. But I'll still do it that way because I'm not a bad person. So last line, that's my expo. So we have 2 minutes and 30 seconds left. I have good prizes, by the way. I don't know if the people from yesterday have gotten their emails yet, but they will get it. Please, bills is not a financial market term. It's a term I don't like to hear because it means I have to spend money. So we are not taking bills. We have 1 minute, 30 seconds. Okay, really seems like, please, I don't want to go back with my gifts. I'm very generous. I just want to give it out. So can we have more people, please? Hope you're typing it down and you're ready to push. If you can't get them all in alphabetical order, that's fine, but let me just have the items and please, please, please. Nobody has it. One minute left. 1 minute left, please. Actually, you have about 50 seconds left now. Okay, I've just spotted another one. Middle straight line. Okay, so we have about 20 seconds left. Hope we're doing well and we're doing good. And we are almost done. And time is up. Thank you, everyone. Thank you for participating. I hope you sent your messages directly to Kofo because I can't see any in my box. If you send to Kofo, you can also send to me directly as well, or you can send to Rosemary to all be collated. Okay, so thank you very much. I can see we had a very healthy participation. Thank you everyone for participating. And now on to the last thing, we have a quiz. So this was like some sort of quiz per se, but now we have the real quiz. This is easier. Objective questions. I'm going to post the link in the chat box in a minute so that we can start the quiz. We have 5 minutes for this as well, but I promise you, you'll finish before 5 minutes. Yes, it is that simple. Sheg was very explanatory, so you will get it. I've posted the link and our time Let me just give you all time to get the link to see it, and you can click and start. And our time starts in 3, 2, 1. So we start now. Please, if you haven't seen the link or if you can't click on the link, let me know. If you're having any issues, let me know, please. Our time starts now. Oh, sorry, Deborah, but you can try this one. Okay, Peter can't see, Sahala can't see the link, okay. Check the chat box, I sent it to everyone. Okay, let me try that again. Can we all see the link now? Okay, I think I just sent to, okay, now, the time starts now, I'm restarting. So let me just give you like 5 seconds to click on it. Okay, we're starting now, thank you. Okay, I hope we're all on the link now, taking the quiz. It's a very, very simple quiz. This one, I cannot even give you expo, like, it's not even going to be fair. It's very simple. Okay, so once you're done, just type, I'm done, I'm done, I'm done. Let me see the first people who will finish. We're mostly finance students, so I know it will be a breeze. Plus, Shegun was really explanatory. Aha! Abraham is done. Who else is done? Who else is done? Glory is done. Good. Good job, Glory. Mm-hmm. You guys are really fast, not even up to 2 minutes. I told you that the test is actually easy. If you're listening well, you will be done in less than 5 minutes. So actually expect that before 5 minutes, everyone will type done. Okay, let me also take the quiz for good measure, and I'll type I'm done when I'm done. Please remember to write your name in full so that it can be properly identified. Okay, Kabiru is done. Thank you very much, Kabiru. We have almost 2 minutes left. I hope we're doing well. Hope we're doing good. I'm almost done as well, and I started well less than a minute ago. So you all should be done by now. Okay, I'm also done. Who else is done? Okay, so we had the first 2 people, Abraham, Gloria, and Kabiru, but that doesn't mean that they are the winners. We'll have to check everybody's answers. Thank you, Mario. Thank you, Peter. And our 5 minutes will soon be up. We have 1 minute remaining, and that will be it. So Whilst we are waiting for the 1 minute to come and go, thank you everyone for participating in the 3 activities, starting from a find the interesting items, I'll call it that, the puzzle, and then of course the quiz. And I hope we've expanded our knowledge. Please continue staying on. We still have 2 exciting sessions to go. I'm sure you're wondering how to invest or how you can broaden your career, what it means to work in a place like this. Just chill. You're going to get it, okay? So please stay on. And we have 30 seconds to go. Okay, and that is a wrap. We're done. Thank you very much for this. Thank you everyone for participating. Thank you, Rosemary, for being our extra eyes. So I'm done with my session and I'll be handing over to Kofo. Everyone enjoy the rest of your session and don't go anywhere. Thank you.
Thank you very much, Bede. I hope you guys had a really good time and were able to put to practice, or you were able to answer some questions right. Well, all questions right, because ideally the quiz, I expect that most of you get all the answers correctly. It would then be a case of who was the fastest, perhaps, if all of you got it right. So thank you for staying on. And again, there are lots of prizes. So for all the sessions, the 3 different the quiz, the puzzle, and the activity, all that, the winners will be receiving gifts. So I'll be contacting you, I'll be sending you an email later to announce the winners. Yeah. So we'll quickly move on to the next segment, and that's going to be Investing 101. So you've learned all about, the different securities traded in the financial market and, as investment vehicles that you can invest in. Now, this is a practical segment where you learn practically what you need to do to start investing in those securities. So I'd like to call on my colleague Shubowale to join us to take this session.
Thank you very much, Kofo. And hello, everyone. I know we've been having a very good time talking about the financial system, the financial market infrastructures, talking about the various financial market instruments, various investment vehicles that we should know about and to guide us in making appropriate investments. However, as it is said that in the physics law that all object remains as a state of rest until a force is applied. That means there must be an action to every intent, to every learning and knowledge gain. Otherwise, all those knowledge gain will be useless. So at this point in time, we'll be talking about how well we can deploy our funds so that we can invest accordingly in the manner at which we will be able to gain or have a better value for the funds we have deployed. So we go straight to the various prerequisites, those things that we need to have in place for us to be able to invest accordingly. Now, from the slides you are seeing in front of you right now, there's basically some items we need to have in place already to be able to facilitate our investing world. For yourself, as an undergraduate student in university, there are some things you'll be aware of. There are some things you may not be aware of. There are some institutions you will have engaged with. There are some you might not have engaged with at all. Now, in this point that we'll be talking about the bank, I'm so sure, and I could be wrong, that virtually all of you have an engagement with the bank. You need a bank account. You need a banker to help propel your investment activities. When I mean a bank account, you're an active bank account, not a dormant one, because there is where your investments will be funded. And it's from there, the purchases definitely will be settled from. Also, you will need a relationship manager. Please bear in mind, you might not know you have a relationship manager who is called an harem. Every person banking with a bank definitely has an harem. And the easiest way for you to do is to go to your bank, you might place a call to the customer care, or go to your bank or any of the bank branches and ask, Who is your harem? It's very, very important that you have this in place at the tip of your hand. It helps you to be able to communicate, to put your instruction through of what you want to do. Apart from investing transaction, any other transaction within the bank, when you have an harem, it helps ensure that that goes through. Also, when it comes to investing in stocks, as my colleague Shegun earlier mentioned, that is equities of a company you are interested in, you will need to engage a stockbroker. These are those individuals that work in an organization, usually can be a stockbroking firm or an asset management firm, that help in the purchase of stocks of various companies listed on the stock exchange. So you will need to engage them. You will need them to register with them, open an account with them. And at that point in time, you've already created a foundation for yourself to be able to purchase or procure these stocks or dispose of them anytime it's needed. However, for the purpose of investing in securities like mutual funds, you will also need the help of asset managers, they're otherwise known as fund managers. They are as well as otherwise known as investment managers. So these asset managers or fund managers are those who manage mutual funds. You will need to as well be acclimatized with these people. You need them, you need the institution to be able to know with various kind of funds available. You might be asking, what are these asset managers? What are those examples of those in Nigeria? Going as well into the internet, asking for the list of asset managers in Nigeria, you will find some. Not that I'm here to proclaim any name, but there are lots of them. Most of the banks we have that have an holding company structure have other financial institutions that act as asset managers or stockbrokers. So go ahead into the internet, you will see a lot of them listed in there. Somebody was asking, is RM the same thing as account officer? Exactly. They are your account officers. Their RMs are your account officers. They will help you through whenever you need an investment to be initiated on your behalf. Another thing you need as well in this slide is information. They say, information brings about transformation. And when you're transformed, that means you know what you are doing. Lack of information can help you make an uninformed decision. When investing as well, you need information about the kind of investment you are trying to go into. You need knowledge about that information, about that investment you are trying to go into. And most in this era that we have, virtually everything can be done virtually. You might not necessarily have to be at the asset manager's office or the stockbroker's office directly. Your phone, your iPad, these are gadgets, in form of technology. These are things you need to have at your fingertips to be able to help enable you carry out various investments you intend embarking on. For example, some asset management firm has some app for investing. So a stockbroker firm has some application that downloading on your phone, you can easily get activated. You can get your investment pulled through. So, but definitely you still need to engage them so that they can tell you the ways how to download, what you need to do to make this thing active on your phone. Now, we'll give you the steps on how to invest based on the major financial security that we know is applicable here at our hand here for you as an individual, what you can do, the various steps. I've grouped them into 3. I'm packing the treasury bills and bonds together, whether FGN bond or Euro bonds. I'm packing them together. What I said earlier, you will need to have a bank account, an active bank account. Know your account officer or your relationship manager. Then specify to your relationship manager the kind of security you want to buy. For example, I want to buy an FGN bond, which is the federal government bond. It has a tenure of 5 years. It has I want to buy a particular volume. That is the amount. Let's say 100,000. That's what I want to buy. You tell your harem, excuse me. He or she will specify to you whether you need to fill a form or not. He will let you know what you need to do. Or if just an email is required, just for them to activate or to act upon your instruction. But bear in mind, before your email can be relied upon, you must have signed an email indemnity with them for them to agree to use your email as a source of instruction because of kind of fraud that's going on around the globe right now. So when an email is sent to your RM definitely will pass that instruction to the bank treasury where they will buy your bond or your treasury bill for you. Upon execution of that trade, they will send you a contract note, but please always endeavor to ask for your contract note. That's an evidence of purchase. But when it comes to mutual funds, as I said earlier, you need to engage an asset management firm. There are lots of them across in Nigeria. When you engage them, inquire from the asset manager the various funds they have that you can invest in. Now, be rest assured that they will ask you as well, after listening to the funds, some questions about your risk appetite. When I mean risk appetite, they're talking more about what kind of level of risk are you willing to take. If you see any volatility in your investment, that is, your investment goes up today, it comes down tomorrow, will you be able to tolerate it? Do you have to stomach it? If you do not have, they'll propose to you kind of another mutual fund that has no volatility. But remember, the more the volatility in an investment, I mean, that's risk, then the possibility or potential for high return as well. The less the volatility, then the potential for very low return. So you must be able to make your choice. You have to have a time horizon. How long do you want to keep this money for? All this will inform the kind of fund, mutual fund, they will propose to you. Having cleared that stage, then they will give you the necessary forms to fill and for you to submit your supporting document, we call it KYC, know your customer. Those information will be taken from you as well and submitted as well. Then at that moment of making a choice of a particular fund, they will request you to transfer your money, the money you want to invest into a designated account. Having done that, as I said again, always obtain your contract note, the evidence of investment. So, for those who intend investing in stocks, you need to engage a stockbroking firm called stockbrokers. Definitely, you have to open an account with them. But in stockbroking, that means you are buying equity or shares of company. But there are a lot of information about the company you need to know. The stockbrokers, definitely, some of them do have a research department that try to analyze this company's performance in terms of both their qualitative and quantitative output. You'll be able to see that their PBT over the years, looking at the track record, the consistency of paying dividends over the years, the kind of dividend yield, the PE forecast or the PE ratio forecast of all these companies. There and there, you even look at the prices, the price trend. How high has this price of this stock gone before and how low has it been? There you make your decision. Is it the right time for me to come in or not? They also can give the advice. Let you know it's time to come in, or you can still hold, or you can discount your entry price before you buy these stocks. When that is done, you determine the stocks you want to buy. Then you fund your stockbroking account. After that is done, you give them instruction to go ahead and purchase. They will purchase. Then when the purchase is done, as usual, obtain your evidence of purchase, which is your contract notes. These are the simple steps by which you can actually bring to limelight your investment intent or decisions. These are the practical steps you can actually embark on. I will go to the next slide now, which talks about you creating your wealth world yourself. How do you create that? We've said a lot of things about the various assets, the various instruments, the financial market, how to be invested as well. But there are some things we need to be careful about, even about our own personality, that we need to be watchful about, so that we can create a long-lasting wealth. First of all, remember that Rome was not built in a day, and money never grew on trees. They say that the best time to plant a tree was 20 years ago, but the next best time is now. It's not too late. You are still in the higher institution. If I'm not mistaken, but maybe majority of us, majority of you are in higher institution, that means you have the leeway, the opportunity to be able to start laying the foundation right at this moment. Now is the time for you to define your goals. What do I want to do after now? You know, when steps are broken down, with a date, it becomes a goal. When the goals have plans on how it's to be achieved, then there is focus. So you need to have a plan of what you want to do. How many streams of income do I want to have? There can be passive income for you by you investing, and those investments generating money for you outside your career. Another thing that affects us as individuals when investing is our lack of discipline. And to be able to correct that, budgeting is what comes in place. There's a saying that he who fails to economize at a point in life will agonize. If you fail to economize, you will agonize. It is very important that you plan yourself well and create an act of discipline in saving. A saying also comes to mind where it is written that wealth is not built overnight. Wealth or true wealth is built overnight. It takes time, and there's time on your side right now to start building your wealth by actively involving in saving. By actively involving what? I said again, in savings. It's very important that we save. When you do not save, you miss out on opportunity. I'll give an example. There's a young man who's been saving. He's been diligent, consistent about it. He saved and he was able to raise about 1.2 million naira. An opportunity came from the blues one day. A man had an opportunity to leave the country, and there's a time slot for him to leave. Otherwise, he will miss out on that opportunity to himself. So he wanted to sell all his items. He had an LR4. He wanted to sell. That LR4 is worth about 4 million naira. He put it out for that same price, but nobody was buying. But he came to this young chap. I want to sell this car, this vehicle. 4 million naira. The guy said, I don't have that. If I can sell it for me for 1 million, I'll pay you right away. The guy refused. How can I sell something worth 4 million for 1 million? He went away. But over time, nobody was still buying. The next 1 week, he came back. Okay, I will sell it for 1 million. Can you just bring the money, take the car? The young chap would have lost out on the opportunity if he had no savings. He bought the LR4 for 1 million naira. But that is not even the issue. It was the opportunity. In 6 months' time, the young man sold that car he brought for 1 million naira for 6 million naira. That is opportunity. Where there is no saving, you cannot maximize an opportunity. Warren Buffett said, do not save what is left after spending, but spend what is left after saving. It's very important you keep that in mind. I'll take it again. Do not save what is left after spending, but spend what is left after saving. Also, Albert Einstein said, compound interest is the eighth wonder of the world. He who understands it earns it, but he who doesn't pays it. Let's be watchful. Let's be disciplined. And that is a journey to creating wealth. I also want to emphasize here that you should learn to live within your means. Live within your means. There are people who love to show off. Well, every different stroke for different folks. But let me let you know that most people, or should I say some people, use their hard-earned money to buy things they do not need or want in order to impress people they do not like. I'll take it again. Most people use their hard-earned money to buy things they do not want or need to impress people they do not like. Who is looking at you? What you need to do is to build wealth. You don't need to impress anybody. In the process of impressing, you might get depressed. Let's be careful about that as well. But more importantly, we watch out for debt. Go for debt that will be able to repay itself, not debt for the purpose of partying, not debt for the purpose of going on holidays. Save for those kind of items. But when you're going for debt, go for debt for businesses or investment that will generate returns to pay the debt back. Lastly, you are still young. Start investing now. Sky or above the sky is the limit. Thank you for your time. I would love to have your questions. However, I have a question already that has been asked. My colleague earlier, Shegun, was asked a question: how can an individual decide what instruments to invest in? I think I've answered the question along the line. Let me let you know that there are some things you should note. First of all, ask yourself, what's my risk appetite? When you say risk appetite, that means how well are you ready to go on this kind of investment that may involve some volatility. When I mean volatility, ups and down in the value of your investment. For example, if you buy as a stock, for example, a company's share, the prices will go up and sometimes will come down. Are you ready? Can you stomach that kind of volatility, that movement in your investment? Or you really want a steady investment that grows slow but steady, but gradually it grows? What is your risk appetite? Answer that question before you know what to invest as an individual. 2, what's your time horizon? How long do I want this investment for? Is this investment for my marriage after I graduate? Is this investment to be able to have an apartment when I finish from school? Is this investment for my master's? Look at your time horizon. Those who as well decide what kind of investment you can go for. Or again, you look at when is my liquidity need? I will need this money before I go for NYC because I have a plan to use this money for something. Look at when will I be needing this money? Those are the questions you need to ask. Your age again, look at you. How old am I? I'm just 25. I can buy equities. I'm still young. I can do this kind of investment. If you make you decide what kind of instrument can you do? Can you go for treasury bill or bonds? Or can I go for equities? Since I'm still young, if I take the risk now, I can still meet up. So I can't advise somebody who is at the age of 71 to starting equities right now. Because you know that money is going, unless you want to leave it for the grandchildren, because it's old. So your age too are factors you will consider. What kind of investment as an individual can I invest in? And as I said, your objective. Are you getting married immediately after school in the next 1 year? You can't go and buy equities. You cannot be sure. Market will drain the money. You have to watch out as well. So those are those factors you need to consider if you want to invest as an individual. I'll go to the chat room to be able to see the other questions available in there. Okay. Somebody is asking, sir, regards to investing in stocks, what's your advice with trading using the various online stock trading platforms we have? Well, as I said earlier, you need information to know when to come in and when to exit in a stock. But I will advise you, there's nothing wrong using the trading platforms to trade. But the question, do you have knowledge in exiting or in coming into a particular stock? You should, before going into a stock, please try and have in your mind your entry price. This is what I'm going into. This is my exit. I want a 10% potential upside on this stock. And when I say upside, that means 10 or 20% movement in this particular price. Whatever we set, it might be 5% you want for yourself. When it gets to that level, please be disciplined. That's one thing about investors. If I attain the 5%, oh, it will still go up again. Let me go out now. You hold on. And by the time you see the next time, the stock has done 10% negative. So have a desired entry, have a desired exit. But listen to information of what's going on in the market as well. Some information can send a signal to you that if, for example, you are bought into, Nigerian breweries, for example, and you bought it at 100 naira per stock, then when it came in, you're planning for it to go to, let's say, 150 months, about 50% appreciation. And you hear in the news, oh, there was a fire outbreak somewhere that's got Nigerian breweries factory, and you knew that perhaps this could definitely impact the business. What should you do? Are you still going to wait till that time? Perhaps you might have to exit. So information is very key for you to know when to come in and when to exit in stock trading. It's not a bad idea to use the platforms. So far, you've been able to understand how it should be used, how it should be executed. But more important is the information of knowing when to come in and when to exit. There's no problem with that. So excuse me, sir, I would like to know how to determine the least amount of investment one could do. Is this question totally? Okay, a starting point for investment. Okay, for me, I would like to advise you if you're an undergraduate, you're still in the institution, investment that will really pay you for now to start with because of the volume of what you might have as funds might be the mutual funds, for example, because you can, as low as, I know some asset managers take as low as 1,000 naira, some as 5,000 naira as a minimum amount to invest. So because of the level of income you may have, right? Some of you might have the larger amount of money. That could be true because of some of that passive income or inheritances. But on generic level, you might be more skewed the mutual funds that gives you a very good return at even with the very low amount of money of funds you may have at the moment. So speak with any of the asset managers as you search through the internet, you will see that they have a very little amount for you to come into the mutual fund. Some have 1,000, some have 5,000 minimum to come to start with. I don't know if there's another question they have not answered. Any questions? Any other question? Okay, so before I hand over to my colleague, I will wrap up with this. It's about discipline. There's a saying from Bruce Lee, I know you might have heard about him if you don't really know him. He said, I fear not the man who has practiced 10,000 kicks once, but I fear the man who has practiced one kick 10,000 times. There's a difference between the two. One does 10,000 kicks once. That means a one-off. That means somebody who has a windfall. That's only when it saves. But there's somebody who does a kick regularly, 10,000 times. That means regularly. It does that. That means it saves regularly. The act of discipline. You don't wait until you have a windfall before you save. You don't wait until you have a windfall before you invest. But maintain a habit of saving regularly, even from the little allowance you are given as a student, or from the passive income that comes from inheritance. Save regularly. It pays. Thank you for your time. I hand over back to my colleague, Kofo.
Thank you so much, Shubowale. I hope you guys learned quite a bit there, quite a lot. And please, if you have any more questions, feel free to send them and we'll endeavor to answer them. You can also send your questions to fmdq-next@fmdqgroup.com. And again, we'll endeavor to answer your questions. Moving on to the last segment, which is the career zone, I'd like to call on my colleagues, Stella, Matt, and Chukwedo Okolo to take this session, please. It's the very last session. So Stella and Chukwedo.
Good afternoon, everyone.
Stella, is your camera on?
It's on.
Okay.
Good afternoon, everyone. I hope you have been enjoying the session so far. It's been really interesting for me. I can say I've learned one or two things, especially from the investing bits. And the Bruce Lee story was actually quite interesting. So I hope you've been enjoying it as much as we have. Myself, okay, I think my colleague already introduced me, but I'll just say my name is Stella But again, and I work with the Clearing Operations Group of FMDQ Clear Limited. FMDQ Clear Limited is one of the subsidiaries that my colleague Mobolaji had mentioned during his session. With my colleague Chukwedo, who you can also see on your screen, our presentation is going to be structured in two parts. So basically, we're going to be taking you through useful tips that you need to know in order to set yourself apart and build a very successful career. I will be talking about what you can start to do right now, even as university students. And Chukwedo will be talking about, what will be expected of you at that point where you're now ready to kick off your career. If you have any questions at the end of the session, please just drop it in the chat and we'll address your questions. So, I mean, we hear from time to time and very frequently that time flies. And of late, it seems truly time has been flying even faster than it has ever done before. So what this means is today you are in the university, right? But before you blink, you are the newest member of the labor market. And I assure you that that market, that space, that professional world is very competitive. So what it means is that you cannot afford to wait till you get to that point before you start to equip yourself and, make yourself stand out and, give yourself an edge to succeed and to thrive in that very competitive space. It means that even at this point, there are things that you can start to do in order to give yourself this edge. And I would just very briefly take us through 4 of those things that I believe and I know that if you can start on it now, you are definitely giving yourself an advantage for the future. So the 4 things will be setting goals. So setting career goals, very important. Personal development, so pursuing constant development of yourself, of your knowledge. The 3rd would be conducting self-appraisals, appraising progress, and then final will be networking. So I'll just briefly touch on each of these points just to provide some background. So when you hear setting career goals, what comes to mind? Why do you even need to set goals? The truth is setting goals, it gives you a plan, right? So it gives you focus. Imagine just living every day, you're waking up, there's nothing you are looking to achieving, so definitely setting goals is very, very important. If you review the most successful people in the world, so maybe just take a biography of one of these people, you would see in maybe not less than 10 pages that they set goals and they made sure that they worked towards achieving those goals every day. So have a plan. What do you want to, what career are you planning to pursue? Document those things that you need to focus on. in order to achieve that. So for instance, you want to be an investment banker. Have you gone online to read what the investment banking career entails? Do you know those things that you need to start looking at, those things you need to start pursuing so that at that point you can succeed? So that's why setting goals are important. It gives you focus. It keeps you motivated. It gives you that vision. So you know what you're all about, you know what you need to achieve at whatever point in your life. And it's not just setting the goals, you need to write these goals down. So you might say, what if I just have it in my head? Looking at these goals constantly keeps you motivated. There was a study conducted in the University of California in the US. It found out that people are more likely to achieve their goals. So 42% more likely to achieve their goals if you write it down. So writing down your goals, it reminds you of your plan. It keeps you focused, it keeps you motivated, and you know at every point what you are working towards. The second will be personal development, which I'm sure we have heard over and over. What are those practical things you can actually do? So again, I would like to stress that one common misconception that university students have is that, my professional life will start after I graduate from the university. So right now, let me just focus on my books. If you have this mindset, it can cost you future opportunities. So you cannot afford to wait till that point. You need to start now. And so what are some practical things that you can do to develop yourself? First thing would be internships. We have a lot of companies currently that they have solid internship programs. And what these programs do is they expose you to the business environment of these companies. And they are open to both undergraduates and even graduate students, but they want skilled interns. So what does this tell you? You need to be equipped. So at this point, you need to start to develop yourself. Consider signing up for internship. They are very valuable ways to gain hands-on experience in whatever career path that you are attempting to pursue. Another thing would be professional courses. So at this point, if you, for instance, again, you want to be an investment banker, which I had mentioned, have you started looking into CFA? You want to have a thriving accounting career. You want to be a chartered accountant. By now, you should have signed up for ICANN. You should have signed up for ACCA. There's no reason why you should not have done that by now. You want to be an IT programmer. You should know Python by now. Or you should know some relational database programs, SQL Server, so you don't wait till you are ready to start working. You need to start now. It's not too late. So there are some people that already have this mindset, and that's fantastic. If you have not been thinking along those lines, it's not too late. You can start today. Another would be another very important professional course to consider will be Microsoft Office training. I assure you that it does not matter what career path you are going to. You would need Microsoft Word, you need Microsoft Excel, you need Microsoft PowerPoint. You need to know how to. From Monday, if you do not know how to use any of these applications, please on Monday, go online and look for courses that you can take. Very, very important. Also to be considered soft skill courses. So it's not just about technical know-how. It's not just about what you know about your field. You also have to consider, can I communicate, which is very important. My colleague Chupedo will probably talk about that during his section. But you need to be able to communicate. And we're talking in terms of writing, in terms of speaking. You need to be able to relate with other people. So you need good interpersonal skills. You need to think critically. So we're talking of critical thinking skills. There are courses online. It doesn't even have to be courses. It could be exercises. Sometimes I even do them. You just have a set of quizzes or questionnaires that just, help you think in a way that you would maybe not ordinarily do. So those are things that the internet even provides a very accessible platform for you to equip yourself with all these skills. You don't have to wait till, you are officially a graduate. You're just wasting time, to be honest. Start now. Start on Monday. Like I said, if you do not know Microsoft Office, please, on Monday, start a training. Just start and do something to equip yourself. Finally, I'll talk of workshops. So workshops are also a very good platform that expose you to other people in your career field and also to potential employers. During the session yesterday, I mentioned one that was organized recently by Jobberman. So they provided that platform where undergraduate students like yourself, NYSC, that's the youth corpers, graduate students, they all came and, they learned, of course, a lot of things that would help them in their careers, writing a good CV, asking one-on-one questions to potential employers. So those kind of platforms, they expose you to what is ahead. So those are things that you should actively engage in and consider. The third point I mentioned was conducting a self-appraisal. So we've talked about documenting your goals. We've talked about equipping yourself, to achieve those goals. Now, conducting a self-appraisal now says, what does it do? It helps you take stock of progress. And how do you do that? Simple, writing a CV. At this point, you should all have CVs. It doesn't matter how skeletal, permits my word, it would look, but you should have a CV. What does that do? It shows you progress you have made. So this is what I want to be. What skills do I have currently? How does my current CV compare to the CV I would like to submit to that company that I want to work with? So it helps you, it shows you what you have achieved, it shows you what the gaps are. It helps you keep progress and it helps you track progress rather. And it keeps you informed that, okay, I still need to do this, I still need to do that. So it's a very good way to take account of the skills that you already possess and to address those gaps that you have identified, of course, with respect to the career that you have chosen. Finally, will be networking. So I usually say that no man can be an island. You see the people you call your classmates today, tomorrow they will be your references. They will be the ones that would open the door to a new opportunity. They can even be your bosses. Sometimes it happens that way. So it is good to build good relationships, beneficial relationships with people. Don't always have the mindset of being, alone. Engage others actively, learn from them. Engage graduate students, people who have recently graduated, find out about their experiences. We have professional platforms like LinkedIn, the social media network that would expose you to employers again, and also people in your chosen career field, and you get to learn a lot. They write a lot, they put up posts on, what the journey has been like. You can ask them questions, you can engage them. So those are useful tools to build your network and to keep you informed and up to date on what is happening in your chosen career line. So just to summarize, 4 key points: set career goals for yourself, make sure you constantly develop yourself, conduct appraisal, so review and see where you are and where you currently want to be, and do not have the mindset of being alone. You need relationships, you need good networks that can possibly open doors for you in the future and that you can learn from and also continually improve yourself. So thank you so much for listening. I would be handing over to my colleague Chukwedo, who will be taking over the second part of this session. Thank you.
Thanks, Stella. Good afternoon, everyone. My name is Chukwedo. I work with talent management in the Human Resources Division of FMDQ. And I'll be taking us over the next couple of minutes. And my emphasis, focus over the next couple of minutes will be tips that can assist you to have a rewarding or fulfilling career, how to achieve success when you walk into or finally get into the labor market, as my colleague put it. So I'd actually like to start with a little question, right? And for me, it's more about, what do you guys think will make an employer hire you right now? Then secondly, when you are hired, what will make them promote you or reward you in a positive manner? Just any answer would do so we can get the ball rolling. You can just drop your answer in the chat box. Anyone? Good. The question again. All right. So my question to you guys is basically, if you were to hire someone now, what do you think will make someone want to hire you? And if you eventually get hired, what will make someone promote you? Okay. I see a couple of responses. Thank you very much. Someone says technical skills that differentiate you from others. That's Kabiru. Victoria says my abilities. Abraham says hired because of relevant skills and promote for evident improvement. Awesome. Those are quite fantastic answers, and ability to understand that we have weaknesses and willingness to work on them. Okay, fantastic. When you have hard and soft skills, ability to be creative for employment, knowledge and skills for promotion, improvement of the above. Okay, great. Ability to be distinctive. Ayodele says that, and Victoria, and for promotion is the income I create for the company. I like that answer. Kabir says ability to be creative and a problem solver. Fantastic. You guys are well on your way to having successful careers because you clearly understand that one, there's no employer that is a charity organization, right? So let's always bear that in mind when we either go for an interview or when we get a job. 99% of employers hire you typically because they expect that you'll provide value to them. Value to an organization is different depending on the organization that you work with. So always bear that in mind. If you're going for an interview or you work in a place, ask yourself, what value am I providing? And it's easy to say at the start of my career or when I'm just coming out of the university, what value do I have to offer? But I can guarantee you, even given all the answers that you guys have provided, even from today, you already have innate value within you. And every time in mind, you should always realize that the employer is seeking to extract as much value from you as possible. So at the start of your careers, more often than not, an employer will hire you because of your potential, right? Your potential, your academic prowess, and some of those things that have given us or give us an indication that you have a high likelihood of being a value-adding employee later or further down the line. That could speak to probably what degree you finish with. Is it a first class, a second class? Even though that's not 100% determinant of how successful you will be within the workplace, but it is an indication, right? So at every point in time, right, let us always remember, if I want to be a successful hire, if I want to be successful in my career, I must constantly ask myself, am I creating value? And the question to answer that question is, how do you create value? Stella touched on a couple of the things that you could be doing at the current point in time to create value. So I will touch on one or two of them that should help you while you gain employment. And one of the first things is learning never stops. A couple of you are on the verge of graduating, but do not for 1 minute believe that that's the end of learning. And by learning, I don't necessarily mean obtaining a degree, right? Or obtaining a certification, which are all good. These are things that we encourage, and these are things that we look at when we want to hire people. But we need to see, like one or two of you have said, that you have the ability to acquire new skills, that you have that desire to constantly develop and improve upon the level at which you are today. So, right, it is of supreme importance that you realize that when you join the workforce, regardless of whichever organization you join, and regardless of their learning and development opportunities that they create, the onus is still on you to ensure that you constantly improve on that which you are as of today. Because if you're not improving, you're actually going backwards. So have that continuous learning mindset. I'm getting into the labor force today. As I set goals for myself in terms of my career, I should be setting goals in terms of what I want to learn, the skills that I want to develop. We touched on, and a couple of you have touched on technical skills, behavioral skills. They're all critical. We must constantly improve on those things. So the key thing that I want you to learn or get out of this session today is that at every point in time, ask yourself, what value am I bringing to the table, right? Be clear on that. Be clear on the gaps that you have and seek active ways of developing and improving the value that you have on the table. Because the more value you bring, the more the organization will be inclined to not just hire you, but reward you with promotions and the other things that come with being in an organization and adding value to the organization. So, and the last thing that I will also touch on today is, as you learn and improve your technical ability or abilities, it is of critical importance that you address the behavioral side of things. Typically, when we hire people, we look for two things: technical competence, then behavioral competence or behavioral fit. So, and I want to take a minute to just talk about behavioral fit. We see constantly that the people have the abilities to collaborate in a team. A lot of the things we do at the university level tend to be quite individualistic. We're all chasing that degree on our own. And yes, to a large extent, you will get into the workplace and you'll be asked to deliver things as an individual. But you will find out that you are asked to deliver and work within a team. So what are those skill sets that will make your team members be endeared to you, right? Are you the type that would have issues with every team member? Those rough edges, you need to start ironing them out, because teamwork, collaboration, these are factors that everyone needs to have successful careers, right? It is important that all these interpersonal skills, that you work on them, you develop them. So just as you're getting technical skills, you make sure that you pay specific attention and give enough time to developing those softer skills that are required in the workplace. So just to wrap up my own session without taking too much of each of you's time is: one, remember that organizations are not a charity 9 out of 10 times. They are hiring you because of the value that they expect that you provide. And the only way you can provide that value is if you constantly develop and improve yourself. And two, just as you increase your technical ability, you should work on your behavioral and leadership capabilities, because these are the things that organizations look to promote, to reward, and to hire people for. So at this point, I don't know if you have specific questions that you would want either myself or Stella to answer as it pertains to developing and growing your careers. So I'll be here on the call for the next couple of minutes, and I would expect to see questions. Thank you for your time. Okay. So in the absence of any question, I'll say thank you once again for tuning in for this session. And I'll be handing over back to my colleague, Kofo, to round up for the day. Thank you, everyone.
Thank you very much, Chukwedo and Stella. I hope you all thoroughly enjoyed our various sessions today and you learned a lot. Please take a moment to complete the poll that's probably popped up on your screen now. Thank you for making time out to be part of this program. I hope you found it very informative and it was fun, and we have lots of prizes to share later. We would also be sending you an email for your quiz results and all of that. And also look out for an email with your certificates of completion of participation for this program. For some of you who are still here, please, if you like to turn on your cameras so we can take a quick picture. And facilitators inclusive. If you just turn on your cameras very quickly just to take a photo. Thank you. Thank you. I think Chukwedo there's a comment for you.
Yeah. You want me to take that now? Take that.
No, let's
you want
just
me to take it?
as they turn on their cameras, I guess you can. You can take it quickly.
Okay, there's a question from Uyindamola, right? You're a psychology student and you're interested in human resource management. How do you switch? I'm not so sure of the workings in your university, but what I'll tell you is I'm an economics graduate and I'm in human resource management. Psychology is an integral part of what we do in human resource management. So I wouldn't say if you don't get a first degree in human resource management or any degree in human resource management that you can't have a thriving career there. What I'll advise you to do is to speak to either your guidance counselor or your course advisors in school to find out how you can switch. That's even if it's available within your own university. So there'll be some specifics around that which I might not be able to answer, but I can reassure you that a first degree in human resource or not having one will not stop you from having a fantastic career in human resource management. Psychology will actually do you a lot of good. So don't be discouraged. Speak to your advisors, and if you need more guidance on this, I'm sure you can do me a message through FMDQ Next, and we can see how we can work around that. So thank you.
Thank you very much, Akwedo. Yes, so thank you for turning on your cameras. So is it Rosemary? Please let her, we're ready. So on the count of 3, just your perfect smiles. So 1, 2, 3. Thanks for the big smiles. Rosemary, have you got the picture? Do a thumbs up so I know. Great, fantastic. Thank you guys so much. Remember, keep growing, keep saving, start investing, and do not stop learning. Thank you so much. And we hope to, yes, stay tuned for some of our programs. We have a few coming up, and so stay tuned. Thank you.